Let's start by examining the current situation. A renowned investor, Jim Rogers, a name many of you might recognize, has issued a significant warning. He cautions that Donald Trump, set to become president on January 21 next year, will implement his America First policy. Now, pay attention. Trump has consistently stated that his policy will prioritize America. This means that while the USA has been supporting the world through subsidies and funding, Trump's focus will shift primarily to American interests. He'll concentrate on what's essential for the American people right now. This policy is viewed as potentially unfavorable for the stock market, especially for US citizens, as its implementation raises concerns. That's why Jim Rogers advises finding a safe haven. He suggests that those currently investing in the US stock market should consider moving towards safe haven assets like gold and silver. The reason? Inflation is expected to soar in the coming times. As you might recall from economics, gold and silver are effective hedges against inflation, typically covering the entire inflationary aspect. Rogers also pointed out that Trump's policy might not be beneficial for the USA either. While Trump might intend to challenge the world by imposing trade tariffs on various countries, this could backfire and negatively impact the USA. The resulting global trade war could lead to worldwide inflation and potentially trigger a global recession. Remember Trump's campaign slogan, "Make America Great Again." You've likely seen those MAGA caps. This promise essentially means establishing more manufacturing industries within America, aiming to produce domestically what America currently imports. However, Rogers warns that this approach poses a significant inflation risk. Consequently, the U.S. Federal Reserve might need to raise interest rates substantially to counter this. Recently, we've seen the Fed reducing policy rates. Just last month, they cut the rate by 50 basis points, with another 25 basis point cut likely in November. However, Trump's policy might force them to increase rates to control inflation. You might wonder how this leads to inflation. If Trump wants to boost domestic production, how does that cause price increases? Here's the explanation. Trump will likely impose tariffs. If America currently imports goods from countries like India and China, and Trump imposes tariffs on these goods, making them more expensive, Americans will be less likely to buy them. Trump's logic is that these goods should either be made in America, or other countries should provide them at lower costs. He also wants countries like India to remove their tariffs on American goods. This scenario could create a trade war-like situation. Countries might start imposing retaliatory tariffs, disrupting the established global supply chain. Such disruptions, as we saw during COVID, typically lead to price increases, hence the risk of global inflation. Additionally, Rogers highlighted another crucial point, that China is currently America's biggest perceived enemy. The potential consequences of this policy are far-reaching. It could significantly alter global trade dynamics, affecting not just the USA but countries worldwide. Increased production costs in the USA coupled with retaliatory tariffs from other nations could lead to higher consumer prices, fueling inflation. This inflation might force the Federal Reserve to raise interest rates more aggressively than planned, potentially slowing economic growth. Moreover, disrupting global supply chains could lead to shortages and further price increases. While the Make America Great Again policy aims to boost domestic manufacturing, it might inadvertently harm American consumers and businesses relying on imported goods or components. The resulting economic uncertainty could dampen investor confidence, leading to volatility in financial markets. Rogers' warning about seeking safe haven assets reflects growing concern among some investors about potential economic turbulence ahead. Precious metals like gold and silver have historically been seen as stores of value during economic uncertainty and high inflation. However, it's important to note that economic predictions are never certain. The actual impact of these policies will depend on various factors, including implementation methods, other countries' responses, and overall global economic conditions. As always, investors and citizens should stay informed and consider diversifying their assets to mitigate potential risks. Trump is likely to impose a 60% tariff on Chinese goods to restrict imports from China. However, Rogers believes that while this policy might harm China, it could harm America even more. It's a concerning issue for America because trade restrictions aren't beneficial for anyone, neither for the world nor for his own country. The US is already facing economic challenges, including inflation. Even though the central bank is cutting rates, if inflation increases due to Trump's policies, rates will need to be raised again. This could create a trade war-like situation. Rogers also mentioned America's significant debt problem. When Trump attempts to address these issues, he might make mistakes that could negatively impact the world. Rogers warns that we might see the biggest recession ever. He suggests that America should focus on cutting its spending and debt, both domestically and internationally. Attempting to restrict trade could ultimately increase domestic inflation and worsen the economic situation. So, is a recession coming to the US? Until now, concerns were that the US might face a recession in 2025. This serves as a significant warning for the US stock market. While the market has grown over the past 2 years and even saw a slight rise after Trump's victory, it could fall just as quickly, according to Rogers. What they're planning for the US economy might not be favorable and could ultimately increase the fiscal deficit. Trump has also proposed a massive cut in corporate taxes to encourage more companies to profit and produce in America. However, if taxes are cut, government revenue will decrease. If revenue doesn't come in, the fiscal deficit will increase rapidly. The fiscal deficit is the difference between the government's income and expenditure. If the government's income falls significantly due to tax cuts, the deficit will grow quickly. Another expert, Peter Schiff, chief economist and global strategist at Euro-Pacific Asset Management, has predicted a US dollar crisis in 2025 that could crash the American economy. He believes that in the coming years, the US dollar will fall rapidly, ultimately crashing the US economy. Schiff anticipates a major shift in the US Federal Reserve's strategy. As mentioned earlier, if inflation increases in the US, rates won't be cut. Instead, they'll be raised. So what does a US dollar crisis mean, and what will be its impact? The dollar index, which shows the dollar's strength, was around 103 to 104 before the November 5th election in America. After Trump's victory, it rose slightly to around 106, indicating a stronger US dollar. However, Schiff predicts the dollar index might fall below 90% soon. During the COVID-19 period in 2020, it had fallen to that level, and it could go even lower. This is not good for the US and could be termed a US dollar crisis. When the US currency depreciates, US exports become cheaper, potentially leading to more exports. However, imported goods will become much more expensive, ultimately harming the US economy. While many experts were predicting economic issues for the US, a report from the State Bank of India suggested that during Trump's second term, the Indian rupee would depreciate by only 8 to 10%. This is significantly less than the 28% depreciation during Obama's term, 11% during Trump's first term, and around 14 to 15% during the COVID-19 period. So, we can see a connection here. On one hand, there's talk of a weakening dollar index and a potential dollar crisis. On the other hand, the Indian rupee is not expected to fall significantly. When asked about India, Jim Rogers was quite positive. He mentioned that India's situation has improved significantly. In fact, he admitted to previously investing in India, but withdrawing his investment soon after, which he now considers a mistake. Rogers believes India has great potential at the moment, making it a bright spot in the global economic landscape.